Hey traders, checking in on the stock market today. Bulls follow through and prove control that we saw starting yesterday. The volume was a key indication, and there's a volume tip I'm going to share with you here later in this video. And we'll also check in on the rotation that we're keeping an eye on. Stay tuned. So SPY has yet to break resistance, but it's in play here, and we're going to be looking up at 417.49 for the bulls to regain the uptrend. If we reject from that level and pull back, we can stay in a tightening range. One thing that I watch for during rotation is for Big Daddy, which in the stock market is SPY. In crypto, it's Bitcoin. When it trades sideways, that's when we see a lot of rotation going on, and that comes from the cryptocurrency space. When the altcoin market is strong, Bitcoin sideways is ideal, because if Bitcoin's going up, that's where the attention is. But if it's sideways and there's no fear, there's money rotating around. So I'm watching if SPY does give us a little equilibrium. Is that going to be a part of the bigger picture rotation that I am keeping an eye on? And again, the rotation that I'm keeping an eye on is out of opening up names, financial sector, energy sector, cruises, airliners, etc., and back towards growth names, and by default QQQ with it as well. So this is something that's going to take weeks to play out. And as a day trader, I'm used to seeing things play out in a day or in 2 hours or in 2 days. So this is definitely patience, because you have to observe something that takes weeks to play out. So if we see a rejection from resistance tomorrow, if we are unable to break 417.49, we are heading into next week with a nice and clear daily equilibrium. And we'll be watching for the break of it next week. QQQ, daily follow through. Gap down open, bulls controlled the entirety of yesterday. Gap up open, bulls controlled the entirety of today. And I mean, they controlled the entirety of today. So in yesterday's video, go back and watch it. We pointed out how QQQ volume stood out to us. And it was really the first 2 hours showing me on QQQ that it was the highest bull volume of any bounce attempt that we had seen on this entire pullback. Volume is our proven indicator. When there is notable bull or notable bear volume, they're proving the price action. As we know, the broader market does not see weakness with any follow through unless there is notable volume behind it. The bulls don't need notable volume to go up, but when we see notable volume, it stands out to us. So it stood out yesterday, and that standing out to me yesterday had me shift my hedge positions. And I exited some SQQQ and I added FAZ because I wanted to go with the weaker of the two names as far as who am I looking to have a bearish position in to try and offset any weakness that my longer term holdings may see on any kind of pullback. So today, in the first 15 minutes, look at the volume increasing. So as soon as I saw that, all out SQQQ, and my only hedge position right now is FAZ. And the financial sector was flat today. So my bullish positions in my portfolio all went up really nicely. My hedge position did not hurt me at all because it's flat. And that's the ideal scenario to be in. And I am very confident that my FAZ position will go up the next time any of my long holdings go down. So that's the rotation that we're watching for. Today was very clear. One day is not enough. We're watching for it to take place over weeks, but today is exactly what I want to see for this thesis to play out. Volume clue. Okay, here's a tip. Put out your pens and papers and write this one down. When you see increasing volume after the first candle on the morning, or the first and second candle, when you're seeing the highest 5-minute volume candle on the third, fourth, or fifth candle on the morning, or bear volume, when the highest volume candle is not the first couple candles, it stands out. I would say it happens less than 3% of the time. So this is not a common signal, which is why when it happens, we need a flashing red light in our brain that says, pay attention to that. And there's numerous ways that we can utilize that information. I learned this from the Canadian marijuana sector and CGC. Just time and time again, CGC would do this where it would see its highest volume candle, the third 5-minute candle of the day, and then the bulls would control the rest of the morning. I saw it enough times where I started to automatically act on it. And if I saw that happen, I would just mark it buy. Normally, if I see a big bull move and I look at this 15-minute time frame, or this 15-minute period, I would say, I missed it. It's too extended. There's no support level nearby. We're too far above the high of the day. I don't like the risk to reward of entry on that big bull move. I saw it enough times in CGC that I started just market buying as soon as I saw that signal. And I would then just put my stop level at what I would risk for a day loser of a trade. And if we get follow through, which most often we did, I would sell partial into strength, and then my break even is very comfortable at that point. Another way to do it would be to enter the first 2-minute consolidation once you notice the notable volume. This is an example of bull. It can happen bear as well. That has worked well enough with CGC that is a strategy that I will continue to use. TLRY, I pointed it out yesterday or 2 days ago while live streaming, May 17th, 3 days ago. So this is what I'm talking about. The 97% plus pattern is the highest volume candle the first 5 minutes when everything's doing its fast action, then a little bit less, then a little bit less, then a little bit less as it declines into the first half hour and hour of the day. TLRY had a normal volume pattern the first 15 minutes. The fourth candle of the day said, here I am, big bull signal. From there, even if you bought the top of that candle, there was over 3% of follow through in less than an hour. So again, acting on that signal is a decent strategy. It has decent probability. You don't want to just buy and not have a game plan. You got to have your game plan. It just means, for me, it's an aggressive switch. Just flip the go aggressive switch when I see that happen. And QQQ did it today. And it's rare. I can't remember the last time I saw QQQ do it. It's more common on an individual name than it is on an entire sector or ETF. Try it out. XLF, much weaker. So again, at this point, my hedge position is with the weaker sector, in my opinion, because we're close to potentially losing the uptrend. I'm looking for monthly consolidation. If we lose the uptrend, we're going to have a bearish reversal monthly candle form. And the QQQ bulls just proved it. They just changed the daily trend. So they are not as weak as they have been over the last few weeks while I held that SQQQ position. So XLF, what I want to see is a lower high compared to 38.05 and then roll over and break 36.54 support to confirm a daily downtrend and start weekly consolidation. From there, we will just be looking for a weekly high or low, but I want to see that happen. It doesn't have to happen. In terms of rotation, we can see money rotate into growth sectors and other places without seeing weakness in XLF, but it's just one piece of the puzzle of what I'm watching for, bigger picture here, May into June. IWM, did we change the daily trend? Nope. So anything under 223.24 is just a daily lower high, and just like SPY, we're watching this tightening daily equilibrium, and it can definitely break in either direction. What would be a bear scenario for the broader market? SPY rejecting from resistance, continuing the daily downtrend, and if that were going to happen, that would mean this QQQ bull break would have to see a lack of follow through. And if QQQ gives us a weekly lower high and lower low, which would be a head and shoulders pattern, that's a possibility. So this isn't, bulls are safe and in the clear. We're continuing to watch on a daily basis for clues of any signs of weakness, but this is definitely a big sigh of relief after multiple weeks of a little bit of fear in the tech sector. So not going to just completely give it to the bulls in QQQ because that weekly downtrend is a possibility. But for now, we have a new uptrend, and anything above 316.30 is a daily high or low. Energy sector, grinding support here, 51.18. If that breaks, we confirm the daily downtrend. And again, we are right there, and oil is still weak. We'll look at oil here towards the end, but just watching for the energy sector to start some weekly consolidation as well. We had a weekly bull break with a lack of follow through. Maybe it's time for monthly consolidation. We will see. XLV, big bull move, held support, broke resistance. So now QQQ and XLV stood out today for bulls, and XLF stood out for bears. And nothing notably bearish, just the fact that it was flat on a very bullish market day. So all-time high, 125.19, negating the daily bear flag, saved by the bulls. So all-time high in play. Biotech sector, daily higher low established at 123.83. If the bulls are going to continue to have our attention looking for a monthly higher low, we must continue these little higher lows and higher highs. So I need a bull break of 130.32 to keep that going. Again, the monthly time frame, we're looking for a higher low. A lot of proving has to happen. We're just looking for a weekly lower high, anything under 140.88. So XBI has proving to do, but it is one of the growth names that we're keeping an eye on after months of consolidation. Semiconductors, big bull day. The volume was there yesterday. Same thing as QQQ today. Did we see that 5 minute? I don't know. Nope, no 5 minute volume pattern standing out. This doesn't stand out to me, so this is an example of not what I'm talking about. So there's your normal volume pattern on the morning, and then level out, and here you don't say, oh, there's our signal. It would have worked, but that's not what I'm talking about, because once you reach a point where the volume drops off, you have to see a volume spike. It's either going to be a bull or a bear volume spike, but you don't just stay flat forever. You reach this little equilibrium of volume where things chill out on the morning, and then you see that declining volume pattern break. Hourly uptrend are our guides on QQQ and SMH. And now next resistance is 245.50, and we zoom out and watch for anything under 257.54 to be a weekly lower high. It is a weekly equilibrium right now, and if we don't break the all-time high, or 257.54, it could continue playing out into mid-June. So watching for the potential of a weekly lower high to be the result of this daily trend change, and a loss of the daily higher lows after changing the daily trend is an indication of a weekly lower high potentially being set. But just like QQQ, the bulls have a lot of space. Anything above 223.94 is a daily higher low. We're extended in the short term on both QQQ and SMH. And bulls just want to maintain hourly uptrends into the weekend. Plenty of space for an hourly higher low. And if SMH and QQQ gap up open tomorrow, I'll be keeping an eye on potential short-term bear plays just because hourly consolidation will be due. Solar sector, proving it. There's rotation going on. Look at that volume. The increasing bull volume absolutely stands out in a very big way to me. So we have a little daily higher low now at 70.12. Bull break. Look at the lack of resistance here. Increasing bull volume and a lack of resistance. We've got 78.89, high of today, 79.81, and then a gap at 81.70. Solar is rumbling in terms of getting our attention. Monthly time frame, if we can form a bullish reversal monthly candle holding the monthly EMA 12, by the time May closes, it's going to have our attention. It already does. Weekly time frame, anything under 91.95 is a lower high. On a setup like this, bulls would love to just see a big enough bounce to create the space for a weekly trend change to take shape in June. Again, when we're talking monthly time frame, a couple days gets our attention, but we have to see consistent follow through for the next few weeks. MSOS still not doing much. If the bulls can get over 41.07, they'll get my attention, but for now, they don't really have it. Just a tightening range with bulls not proving much. Need increasing bull volume and a break of 41.07 to get our attention. I feel like there's another sector I wanted to look at. Airliners, I'll go over that in trade. Oh, we'll talk about it. Jets. So I made a bearish trade on Jets today. Double top at the high of yesterday, first thing. That was a great top fishing play. That's not the trade that I took. I saw a descending triangle, which is different than a descending wedge. They look very similar. If I were to draw this pattern like this, it would be a descending wedge. Obviously, I can't draw it like this because that's not what the price did. So that's the biggest difference. The difference is you build a horizontal base of support. The hallmark of a falling wedge, this is a good educational video we got going on. The hallmark of a good falling wedge is bear breaks. When I look for it, it's bear breaks with a lack of follow through. This is a horizontal line of support. Low of the day, held it by a penny, double bottom by a penny, triple bottom, quadruple bottom, just sideways and lower highs every bounce. This is a bearish pattern. It's a continuation pattern. And it's just bulls getting more and more tired. They're trying to hold on. They're playing defense. Every time they try and get out of the corner, they get punched right back into the corner, and they eventually get knocked out. And so this was them getting knocked out, and it got tight enough to the point where I saw this 26.02 resistance here, and I entered bearish at 26, and I put my stop at 26.03. I'm risking 3 pennies. What's that, a 1/10 of a percent? A little less, so I used a large position because it's such small risk. And my target was new low of the day, I'll exit half my position, and then I'll try and let half the position ride. I should have got stopped out here. The bid was 26.02, the ask was 26.03. The highest price hit here on this candle was 26.0299. I missed getting stopped out by 0.001 pennies. I don't think I've ever gotten that close before. And it was just because the bid and the ask were there, and we didn't hit the actual number, 26.03 on the ask. We hit 1/10 of a penny under it, and then the bid and the ask flipped back down to 26.02 on the ask, 26.01, and then we rolled over. Unfortunately, I was away from the computer for a couple hours. I absolutely would have covered everything here for a very solid win, but by the time I got back to the computer, it was right here. Missed the opportunity to take good profit on the second half of my position, so I just stopped out on the bull break of 25.98. So a small win, and not being at the computer cost me money, but that's the way it goes. Life happens. The VIX, tightening up. We're looking for a higher low compared to 1870. And again, if we're going to see continued rotation, if SPY rejects from daily resistance tomorrow and pulls back, what I want to see for my thesis is I want to see XLF down more than QQQ. QQQ can consolidate, and we probably need it with what we've done the last 2 days, but I want to see XLF weaker. I want to see QQQ stronger on green days, and I want to see XLF weaker on red days. So the VIX, that's a possibility. If SPY rejects from resistance, the VIX can look for a higher low compared to 1870 to remain in this tightening range. Dollar, weak, nothing. Looking down at the low. I don't even consider that a new lower high on the daily. I'm still using 90, 91 as my line in the sand that I just keep walking down every lower high. So it's a bear flag attempt. And if we drop down and break 89.68, it's just the low of 89.20. Metals, strong still. So daily inside bar on gold, no major red flags. Even the 4 hour still grinding EMA 12. That's a good sign. And if the dollar sees another leg down, the metals will stay strong. I will exit some of my swing, and I've had them for months and months. Some of my swing, gold, GLD, and SLV positions, I will exit if we lose the daily uptrend. Silver, double bottom. Inside bar has to break bull for a new daily higher low to be set off this EMA 12 support. Miners, daily inside bar, potential daily bull flag. So again, it all depends. Does the dollar see another leg down? Does gold and silver break the daily inside bars bullish? And that's going to determine whether we confirm a daily bull flag or not on GDX. Oil, breaking this wedge bearish, this broadening wedge. Now, one thing about broadening wedges is you can always tweak the line just a little bit to fit your narrative. I guess not in this instance. You could. So I could just do that. You know, if I pulled up the chart right now and said, oh, we're still grinding support, this is an absolutely valid downtrend line. So that's one thing I don't love about trend lines, because you can always just adjust them just a little bit. But I do like it as a visual to be watching. Doorbell, be right back. All right, lost my train of thought. Something about lines. So, bears are in control. If we break 61.95, it's another leg down. And from there, weekly equilibrium. Now it's reminding me, I was looking for that weekly lower high 3 weeks ago. And we double bottomed on the daily right there, 60.61, saved it, very close to a weekly lower high. And now that weekly lower high is looking like it's coming in. That volume is telling me I am on the wrong futures contract at this point. Looks like we've rolled over. CLN is where the volume's at. So that's what we're sticking with. And it's a difference. We did hit a higher high here as opposed to a lower high. So bull break with 0 follow through. Weekly EMA 12 support. And I'm viewing this as an equilibrium. High, low, double top. Anything above 57.18 is a higher low. Natural gas. Trying to hold the daily uptrend. Still space to do so. 4 hour trend change needed. Anything under 2967 is just a lower high. Let's see if this is another bear flag with little follow through straight into a bull move. And if we get over 2967, it'll be notable to increase the odds of a potential daily high or low, but size of the pullback is significant enough as well that we are then also cautious of a daily lower high compared to 312.2 being the result of the next bounce. I think I talked about everything that I wanted to. Didn't do much trading today. I was off the computer for a good chunk, trading crypto more actively than stocks the last 2 days because that's where the opportunity is. If you could see my fees, you would throw up with me. Do good things. See you tomorrow. No, tomorrow's Friday. See you soon.
So tomato plants, I don't know the scientific name for it, but we'll call them stem rooters. When you plant them, you want to take off the bottom few branches and plant them all the way up to their neck because their roots, they'll have a strong root system because they shoot out of anything that gets buried. So this is just one of the starts that I had, and it leaned over into another little tray and it's now rooting. These are all roots that are established, and just a very interesting way that this plant stays alive. Time to hill up the potatoes, which means just putting a mound of soil all around the base, and that allows the actual potatoes to grow underground. You don't want them to be exposed to the sun. You have to do it maybe 3 or 4 times throughout the season as they get bigger and bigger. These are toothache plants, and if you've never had them, your mouth has never experienced this in its life, but you eat these little flower buds and it just makes your mouth this tingly, it's hard to describe how it makes it feel. It's similar to Pop Rocks, but that's just because that's the only thing that's close to describe it. But your whole mouth goes numb in a very interesting way. Not just that you can't feel it, it's all tingly, and if you ever get a chance, it's worth the experience. This bed is all sunflowers and then thousands of tomatillo and ground cherry seeds from last year, as a bunch of the fruit just fell into the bed. So I'm gonna let it go and see how it plays out. The good thing about corn and sunflowers and things that grow really tall is things that are not that tall can still grow amongst them.